Hey everyone, welcome back to another Market Open live stream. Well, folks, 2022 might just end up sucking for stocks. Why? Because we've got Federal Reserve Chairperson Jerome Powell, who's getting pressure to vacuum up all the loose cash around, and well, that's not so great. But we have some updates coming out today regarding just this. Later today, the Federal Reserve, I believe at 11 a.m. California time, but later today, the Federal Reserve will be releasing the minutes from their last Federal Reserve meeting. I expect that a lot of trading is going to be tentative until we get these minutes that come out, and give us some insight into how aggressively the Federal Reserve really wants to act. One of the reasons we saw a little bit of the U-turn in the market yesterday is because the Wall Street Journal published an article discussing how the Federal Reserve is considering unwinding their larger portfolio as a way to potentially limit the need to raise rates as much. And this is, of course, because the market has been sending clear signals to the Federal Reserve that, hey, there's no way you're going to be able to raise rates as much as you think you are. You're going to end up causing a recession. So that's why, okay, we might see a more kind of mixed approach from the Fed. First, taper, then raise rates modestly, wait to see how that inflation data comes in, and then, of course, offload bonds off their balance sheet, taking market or cash away from the market. It's kind of like that vacuum cleaner. Now, we'll see what happens. I think inflation dynamics are going to be the most important element, because we might see one rate increase by March, might come by May, one of those meetings. Right now, the market seems to think it's going to be March, and if that first rate increase does come in March, the market's going to be waiting to see what's going to happen next. Are we going to keep raising rates every single meeting, or will inflation start inflecting down? So far, the first sign that we have any kind of hope for inflation actually going down was actually that prices paid by manufacturers in December came in sharply lower than expected. This is great. But at the same time, we're seeing that a lot more people are quitting their jobs. They're not entirely leaving the labor force. A lot of folks who are quitting their jobs appear to be going to start their own businesses or are going to other businesses. Now, one of the reasons this potentially creates a problem for inflation is when you have people leaving one job and going to another, more often than not, they're doing so that they can get paid more. The more of this kind of rotation you have, the more wage inflation pressure we could end up getting. This Friday, we're expecting the jobs report to come in with 420,000 jobs and a wage price growth of 0.4%. Now, what's really interesting is we might end up getting a massive beat if the ADP is anything to tell. Now, the ADP is a private payroll survey that gives us an idea of perhaps what the unemployment report might look like on Friday. We actually had a pretty large beat. The ADP report came in with 807,000 payrolls in private reporting. This was more than double the 375,000 jobs estimated. Now, keep in mind, the BLS, Bureau of Labor Statistics, jobs report that comes out 5:30 a.m. Friday. Set your calendar for it, California time. That jobs report is expecting 420,000 jobs, so slightly more than the ADP in terms of expectations. But if we get a massive beat like this as well, markets are probably going to react. Now, a big concern is that if the economy is moving too quickly, the economy could overheat, and that would send more of a message to the Federal Reserve that we need to raise rates sooner. That will be a negative catalyst for the stock market going forward, especially tech and growth stocks, which we're seeing a rotation out of right now. Now, it is possible, though, that we could end up with a large number of payrolls, as long as, and the market could react in a benign way, as long as that wage price pressure doesn't come in too strong. We're expecting a 0.4% increase in wages over the last, or from December. In December, we were at in November, we were at 0.3%. We're expecting 0.4% for November. If that number comes in hot and we get a big headline beat in terms of new jobs, new payrolls, then the stock market's not going to be happy at all, because it's going to send a clear as day signal that the Fed's got to start getting their act together. We'll see. Best case scenario would probably be something like a slight miss on wage price growth, something more in tune with a longer term average, like a 0.2% or a 0.3%. Probably closer to 0.2% for a realistic long-term average. But that's also not to say that you don't want to see people making more money. It's just that wages have a big part to say in how much inflation we see and what the Federal Reserve ends up doing. So it's going to be interesting. Friday's going to be interesting. So we've got a few catalysts. We've got the minutes coming out today. Again, Federal Reserve minutes. That'll give us maybe a little bit of insight into what they're looking for. We'll break those down. We've got the jobs report coming out Friday. That'll be a big tell. And as far as other catalysts, we do have CPI data coming out and the Federal Reserve meeting, but the meeting isn't really until the 25th and the 26th. So the jobs and CPI data will be more pressing. CPI data comes out next Wednesday. So 1 week from today, we get CPI. 2 days from today, we get jobs. Those will be big requirements that we have to check off before expecting this market to go higher anytime soon. Now, in terms of some other updates, Omicron, obviously cases are continuing to rise, hoping to see a peak in some of the northeastern areas soon. Hopefully we start getting that kind of reduction like we saw in South Africa. That'd be a positive catalyst for markets. Chinese fears, not too, people don't seem to be too concerned about this. Doesn't seem like the market is really pricing in any kind of issues with Russia or the Ukraine. It doesn't seem the market really seems to care about the issues that we're having in China, beyond, of course, the Chinese market. In other news, we've got CES going on, and apparently just Sony is trying to get into the game of making electric vehicles. It seems like at this point, anybody who does anything related to electronics wants to get into the EV business. A lot of competition for Tesla, I suppose, or a lot of people trying to compete with Tesla and not actually being able to compete with Tesla. Remember that Volkswagen and Toyota, they just made a big bet. They just spent $150 billion investing in expanding their competitiveness. Sorry, it's 117 billion, not 150. 117 billion for their to increase their competitiveness against Tesla and other electric vehicle manufacturers. But remember, Volkswagen's first foray into clean energy was really clean diesel, which turned out to be turned into the big emissions scandal for Volkswagen. So that wasn't ideal. And Toyota's big bet on clean energy has been hybrids. So seeing both of these transition to 100% EVs is going to be something to keep an eye on. Nikola just dropped its $2 billion patent infringement lawsuit for similarities between its semi-truck and Tesla's semi-truck. So it's nice that that's finally over. It does seem like management over at Nikola is trying to right the ship, the Trevor Milton madness ship, which I think is very interesting, and quite frankly a good thing. So, put the past behind, let bygones be bygones, and just focus on actually making a quality vehicle. That appears to be the path that Nikola is taking. What I also want to take a peek at here, I'll get this pulled up here, is I want to see Cathie Wood sales. It looks like we've had a little bit of selling in both Twitter and some other companies. We'll go ahead and pull it up here in a moment so we can get a peek at her sales yesterday. All right, let's see here. ARK. Okay, so ARK Trading. Here we go. This was ARK Trading yesterday. So we've got more sales over at Tesla, but also now a sale over at Twitter. And Cathie seems to be doubling down on a lot of the therapeutic companies. I noticed this more and more, that the therapeutic companies keep getting a love and attention from Cathie, especially during this recent dip here. So, but Tesla getting sold as well as Twitter getting sold. A little bit of Teradyne being sold as well. But yeah, Twitter and Tesla, kind of the core, whereas a lot of pharmaceuticals are getting some love, with the exception of some that are being sold here. Even PayPal and Intuit getting a sell from Cathie here. Interesting. All right. Okay, so then we've got, let's see here, other news we have, Kim, this was another thing I wanted to just touch on. Kim Jong-un apparently suggested that working on nuclear talks with the United States was a very low priority for him, and he's working on instead restarting missile tests. It's like, really? Okay. uh, Probably not the saber rallying, probably not expected to be any kind of real issue for markets. Another thing that was also interesting is that Pepsi is expecting to receive its first Tesla semis soon, and Tesla mega chargers have already been installed. As mega chargers are basically superchargers, but for semi trucks, which is kind of cool. Expect them to be larger and capable of charging semis much faster. Obviously, if you pull one of these up to a supercharger, you don't want to you don't want to sit around waiting with a semi truck. You got to keep these vehicles on the road. That's a big. That's going to be a big test for electric semi trucks. So we'll see if Tesla can pull it off with batteries and an all EV model. I have to say, I really did and still do think that hydrogen is, with the exception of the depression that we had from Nikola, hydrogen's a really great opportunity for long range hauling, medium to large sized trucking. I think there are a lot of opportunities there. Quick to fill up, energy efficient, but a lot of folks not as optimistic for hydrogen. And quite frankly, hydrogen probably won't be a big play until 2020. Well, I should say 2030s, until the 2030s, but we'll see. Okay, so let's go ahead and see what we got on indices, and then we'll jump on over and see what's going on in individual stocks. So Dow futures did turn positive. They were negative. The S&P futures are negative by about 0.04. NASDAQ futures down 0.42, almost a full 0.5% here. If we look at the 10-year Treasury, it's pretty much stable. Oil up a tiny little bit. Let's go to the 2-year just to see for curve purposes. Yeah, tiny little increase here. Barely a move, though, on the 10 and the 10 and the 2. Maybe a slight little compression there, but nothing really notable. Okay, let's also take a peek at. We already looked at job numbers, John Doe. You gotta watch from the beginning of the video. All right, so let's take a quick look at crypto pricing here. Bitcoin sitting at 46.4, Ethereum 38. So pretty much above our low of that 45.5 number here. You can see above this shelf over here, and but unfortunately not able to get back into the original channel where Bitcoin was trading a lot. So still seeing that nervousness here, just like you are seeing in the tech sector and the NASDAQ, which remember, we think there's a pretty decent link between the NASDAQ and Bitcoin, but not here. Actually, I'll pull up the beta. It's gotten more aligned, but let's just look here. Let's compare Tesla briefly here to just get this up. Let me see here. Beta. All right, historical beta. Here we go. So let's go ahead and compare BTC USD to the NASDAQ. We'll use the NASDAQ. Yes, NASDAQ comp. Okay, let's see what we get. Yeah, wow. That's interesting. So in the historical beta was about a 0.74 correlation. What that means is if the NASDAQ went up $1, Bitcoin would be expected to go up 74 cents. And the closer to 1 you are, the more of a match you have. So for example, if you had a beta of 2 and the NASDAQ went up 1, then you would expect Bitcoin to go up $2, right? Tesla, for example, has a beta of 2. Anyway, the forward projection is taking Bitcoin's correlation to the NASDAQ from a beta of 0.74 to 0.83. You're really seeing that alignment. Kind of cool. Okay, good. So let's now look at some performers here at the beginning of the day. So we got Sens moving. They had some approval, some form of approval update about. I don't know exactly what the news update was for Sens, but something to the effect of briefly saw this. Some form of approval expected within the next couple weeks. Hold on a sec. What's their breaking news here? Well, let's see here.
Estimate
There we
that's
go.
out there in terms of December, but clearly in the fourth quarter, as they were ramping up production, as the chip supply improved, they did pretty well, delivering more than 500,000 vehicles. The estimate was for 507,000 vehicles to be delivered. The company delivered 508,000 vehicles. For the year in 2021, Ford delivered 1.9 million vehicles. Strong sales, especially coming towards the end of the year for Ford and the F-Series. Remember, there was so much concern.
1.9 million vehicles delivered. That's interesting to think. Ford is delivering 1.9 million vehicles a year. Why does that feel so low? I'll take a look here because Toyota delivers, I want to say, somewhere around 14 million, unless that was just U.S. sales. But then again, that might really be the core market for Ford anyway. Total deliveries 20. Let's look at Toyota's total deliveries 2022. Let's see here. Okay, total worldwide vehicle production 2007 to 2021. Yeah, so Toyota, take a look at this. Toyota delivers somewhere in the neighborhood of 7 to about 9 million vehicles per year. Really interesting. Let's see if we can get the same info, but instead for Ford. Because yeah, look at that. Okay, see, that's what I thought. So that whatever 1.9 number, maybe I just misheard that a little bit. I need to sign in. Okay. Let's see here. Ford vehicles produced 2020. Let's just go with 2020. In 2020, Ford raised, yeah, why? 1.7 million vehicles for 2020. Why does it seem so much lower? I want to look into that a little bit more. I'm kind of confused. Let me look at Toyota versus GM. See how many these are doing. Okay. Auto manufacturers sold just under 15 million new vehicles in 2021, compared to a usual of about 17 million. So a little fewer vehicles. Makes sense that we sold less because of the chip shortages. GM said on Tuesday that its sales had slumped to 2.2 million trucks and cars. Toyota. All right. Well, I'm gonna make a little note here. I want to compare total production of these companies, and so we'll come back to this. Total vehicle production. It's an interesting comparison because a lot of folks who are looking for the growth rates or the growth rate expectations for Tesla try to understand how many vehicles are produced not only for the world, but by individual top producing manufacturers per year. Because a lot of folks think that there's a chance somehow Tesla could manufacture over 10 million vehicles a year, and it's entirely possible. That would imply a big share, though, worldwide. So it'll be interesting to see. I think once we get like a $25,000 Tesla, maybe numbers like that could be quite reasonable, especially if we had more gigafactories to produce these. But anyway, okay. So what do we have here? We got Sens, Beyond Meat, and Nikola, after dropping that lawsuit, actually up 3.2%. Weber, Cinemark, Cheesecake, these all moving about 2 to 3%. Let's see here. Okay, let's go then look at the downside here. On the downside, wow, Roku's really slipped again. So Roku actually ran up to about 230, but all of a sudden losing about 5% here. So you see we had a nice little run there for a moment on a recovery, but now losing value here again. Wayfair down at $180. What's crazy about Wayfair is for so many times did Wayfair hit $300, and it just has given that up completely. And now it's sitting at $178, nearly half of where it had been trading. Neo right back under $30. Adobe now under $550. That's getting almost to our floor levels here that we experienced after the last earnings report of about $538. sitting at 537 right now with the bid ask. That means we are probably going to hit a new low today, a new recent low for Adobe. Xpeng, Li Auto, Neo, Piton, Cloudflare, Lucid, Affirm. These folks all down 2 to 3%, along with Matterport, Embraer, AMC, Rivian. Lots of these individuals here red, including SoFi, almost back to its 1470 support. And Pinterest actually rebounding a little bit. Not as much of a rebound as you might expect after the amount of selling that we had yesterday. It's again probably because of what we talked about earlier. The market's going to be pretty tentative for guidance from the Federal Reserve, specifically the meeting minutes. We'll get those again at 11 today, and then expectations for jobs. What will the reality be for jobs? What will the reality be for CPI inflation next week? The best thing the market could ask for right now would be a collapse in some of these inflationary readings. That would be beautiful. But you can't always get what you want. So we'll see what happens there. All right. Let's see here. Thanks, Will. Let's see. Neo going to break floor today? Yeah, might. Roblox down hard? Let's take a look. I'm saving up $10,000 to partner you one day. I don't know what that means, to partner me. Would that be a good starter amount? I don't know what you're asking. Okay, let's go to, let's take a peek at Roblox here, and then we'll look at some other headlines. We'll see what else is going on. Okay. Yeah, Roblox down 1.47. That's not too terrible. Okay. That's reasonable. Well, anything sitting around plus or minus 2% really is just a kind of a day's fluctuation. 0.5% here on Tesla. Tesla had an interesting move here. Nice little jump up from about that 1050 region. Didn't quite make it to that 1250 on TA. Technically, we still have time for that, but still sitting about $100 more than where we were with deliveries, which is great for Tesla, but still extending a little bit of pain. Smaller caps also seem to be doing the same thing. Shift Technologies here really getting stuck right under that 3.65. Okay, let's see here. Give me 1 second here. Okay, good. So let's see here. Let's explore a little bit what we've got. All right. So we talked about the ADP data already. Great, almost doubling beat of the ADP there. It's interesting that Bloomberg's actually reporting that the ADP sends yields higher. See, this is another thing that we talked about, is that if you get too high of a report, then potentially it sends a signal that maybe the markets are overheating a little bit. And so that ADP report of 807,000 payrolls in the private sector, more than doubling estimates, was pretty shocking. It's amazing how bad estimates have been lately, and I think it's because we're really in this situation that's mostly unprecedented. I mean, quite frankly, 3 years ago, 4 years ago, I don't know that we really cared that much about the ADP unemployment report, and even just unemployment numbers in general were mostly pretty close to estimates. And so I wonder, I'd have to do some more research to actually draw this conclusion. So I can't say that what I'm about to say is a conclusion, but let me visually depict what I'm saying. If, let's say, normal expectations for whether it's inflation or jobs or whatever, let's say normal expectations are this right here. The expectations go up and down. And then let's say that the actual readings are this blue line, right? Something like that. So let's say the blue is actual, purple is the expectation. If we were to draw what actual looks like relative to, or rather what estimates are relative to normal, let's say that the current environment looks a lot more like the estimates are like this, really wild, and then the actual results are also kind of wild. So the volatility is substantially higher, and that makes for much bigger misses and more wild swings, which is one of the reasons the market seems to be so confused in many ways. But it makes sense, until we have more clear data that inflation's actually inflecting down. Kind of makes sense that people are like, you know what, just get me out of the tech sector. Can't blame it. All right. So what else here? All right. So yeah, I saw this. There was a Goldman Sachs analyst who went on Bloomberg TV talking about how Bitcoin could pass 100,000. They had an interesting argument. They had this argument that gold, or rather Bitcoin right now, only takes about 1/5 of the quote store of value market. And that if this rises to say 50% or more, that 100,000 would almost be an easy achievement for Bitcoin. This was also coming from an analyst, by the way, who originally was very anti-Bitcoin. Let's see here. What else? Okay, not terribly much. All right, so let's see here. Mark Zuckerberg sells stock every day as billionaires cash out. Yeah, we thought this would end at the end of the year, that this was more of just a fear that taxes would rise. So this is interesting. Let's just take a quick exploration here. We know this Mark Zuckerberg sold Meta almost every weekday of this year. So, oh, that's from December. Oh, okay, yeah. This is a couple weeks old. All right, I thought that was maybe more updated. But that's interesting. Okay, let's take a peek here. Wall Street Journal. We've got about 2 minutes before the market opens. 5G service rollout delayed amid safety flight concerns. Or flight safety concerns. There we go. Let's say it right. This is something that's been a huge play for individuals in the stock market is just investing in 5G style companies, whether that's Qualcomm, but then the sell-off after Apple said that they were going to make their own radio antenna chips. 5G really a big thesis for investing. I do want to see how T-Mobile, or rather AT&T stock is reacting. It doesn't really appear to be reacting to any sort of delays on 5G. That's surprising. What about T-Mobile? Yeah, no, they're both green here. You get Verizon. Yeah, all of them green. That's interesting. Okay, so not that big of a deal. All right. What else? Let's see. So yeah, Sony trying to get into the electric vehicles. It just talked about that a little earlier too, about how they're having a display over at CES. There was also a statistic, by the way, and the bell's about to occur. There's also a statistic that 60% of individuals are unhappy with the state of the economy the way it is right now. 60%. It's more than half.
Pfizer's got that going for it, Carl. As send it back over to you for the opening bell.
Let's get the bell and the CNBC Real-Time Exchange. And the big board, SPAC, Athena Technology Acquisition Corp, celebrating its recent listing on the NYSE. At the NASDAQ, it is New York-based nonprofit ABC Food Tours. David, we did mention some media names, and we got some year-end subs on HBO and HBO Max. Almost 74 million ahead of estimates.
So about half there on the S&P heat map. Let's go ahead and see how things are moving to start the day. Looks like Sens is actually selling down a little bit, but Beyond Meat is bouncing off the floor pricing here, or was at least in the pre-market, turning slightly red right out of the gate here. Cheesecake hanging out right now. Outlet's at $2.60. Unbelievable. Walt Disney. Let's take a look at Walt Disney here. Disney moving up slightly to 156. We towards the downside. Let's see, downside. Let's sort by change here. There we go. So on the losing side, we have, oh, wow, that's a big move here for Salesforce and Adobe and Roku. Again, the software sectors of the market getting absolutely smashed right now. Roku down 5.1%, Salesforce down 5% to 211. Folks, I don't think Salesforce has done anything all year long now. And Salesforce is a phenomenal company. I mean, it is a bigger company. Or at least in terms of its business, I believe, by then Oracle and some of the other, customer resource management companies here we go. It's 4 times bigger than Oracle. There we go. I thought I had the statistic here, and their revenues are absolutely insane. But to see the software sector here continue to get smacked upside the head is painful for a lot of investors in especially these software companies. Adobe now down to $526. Take a look at the individual chart here. Yeah, look at that. We are just selling straight down here on Adobe. Roku also. Roku moving straight down at 208 right now. That was a brief move to the upside over the last couple weeks, and unfortunately it looks like it's now experiencing a quick move to the downside. We have Affirm down another 4% on the day. Looks like just about 3 minutes into the opening here, we started getting a little bit more pain in the market. Let's see if the indices are experiencing this as well. Yeah, look at that. Look at that. That is a sharp sell down there, all of a sudden coming through on the S&P 500. The last 2 minutes here in a row looks like a rotation straight down. Pulling up Tesla here, folks. Tesla down almost 1 full percent, sitting at 0.91. A lot of hesitancy again expected due to the Federal Reserve and their minutes coming out today. Bill.com. Let's see how Bill.com has moved since its highs. Look at that. Bill.com ran all the way up to $348. Right now trading for about $207. Shift Technology is down 4%, and MViz just completely evaporating its valuation. Straight down. Probably no different for Robinhood. Actually, it is. I stand corrected. Robinhood is actually up 0.4%. Let's see how Bitcoin is reacting after we had the opening bell here. So Bitcoin on the 5-minute chart, not moving much. 1-minute chart, relatively stable as well. ADA, stuck. Very similar charts between all of these here. Matic, ADA, Bitcoin, they look very, very similar. Carnival Cruise Line's back over 22. Okay. So Weber's up 1.5. Delta Airlines, American Airlines, Carnival. Despite all these cancellations, these folks still moving decently well. And Nikola now up 7% after dropping that Tesla lawsuit. You know, one of the things about Nikola, though, is it continues to have these false starts. Look at this, false start. You know, is now going to just be another false start for this one. Even to some degree, these larger moves here, false start. They've just continued to rotate down. All right. So, yeah, Patrick Walsh is asking, if you're investing on a minimum wage income, should I try to diversify small sums or should I be more risky? Well, I think you could make your life very easy by picking, maybe 5 to 10 of your favorites if you had high conviction in them. Or you could always throw into something like metkevin.com/basket, not financial advice. But I think the most important thing for you to do is dump that minimum wage job. You need to figure out what can you do to get your wage up, which is really interesting because I'm dedicating an entire course to just these sorts of scenarios. It's called the Path to Building Wealth for sure. It's very different from the other courses. You can see it linked down below. It is a brand new course, and it releases at the end of this month by my birthday. It's going to be going through a lot of different scenarios for trying to get to the next level. Because quite frankly, if you're investing minimum wage, even if you had an account of $5,000, and even if you had a 20% return in a year, and you did a great job, and in 2022 you returned 20% or even 50%, okay, 50% return, $2,500. Who cares? A better job could help you get that $2,500 much faster, and especially if it's something that you can continue to grow at. So that you got to get out of that for sure. All right. So what else? Let's see here how things are continuing to move here. It looks like the pain over at Salesforce is continuing. Look at that. That looks like a cliff, folks. Ay, look at that. Just boop. Oh, that's not great. Adobe, Salesforce, Monday.com, Bill.com. These were ones getting hit. Again, small caps continuing to burn. Enphase at 172. We're almost going to be going back to some of the May pricing that we saw when we were at about 148. Those were some steals back then, but now it doesn't even look that much of a steal anymore. Just continue to revisit these lower prices. Pinterest actually up 3%. Let's take a peek one more time at the SPY here and see what else is going on. Okay, SPY rebounding now, so just more volatility, really. Tesla up, rotating back up as well. Take a look at the SoFi here. Yeah, SoFi heading back down to that 1471 level and getting the bounce, typical front running bounce. Okay, let's see here. What else is going on? Chicago cancels classes after teachers resist returning to school. Ooh, that doesn't sound good. Supply chain delays prompt a new push to revive U.S. factories. Companies are testing whether the United States can regain some of the manufacturing clout it ceded in recent decades to China and others. Well, this will be interesting. I'll take a peek at this separately, but it makes sense. Bring the factories back to America. Let's take a peek at Barron's. Ooh, Barron's doesn't seem too excited about inflation. Look at this. Can we whip inflation now? Good luck with that. It was 1942. Battles raged across Europe. Everybody was worried about inflation. Everybody's worrying about inflation, Barron's wrote. No way. That's interesting. That is very interesting. Roll back food prices. Oh, man. Today, the coronavirus pandemic rages across the world, and everybody is worrying about inflation. In fact, newspaper headlines and political speeches from the past tell us that inflation worries have always been with us for good reason. Inflation, the decline of purchasing power, makes families worry about how they can stretch paychecks and the burdens companies with rising wages and supply costs. Inflation has been with us here before Nero. In the U.S., we've suffered 3 periods of hyperinflation, one following each world war, and the Great Inflation of the 70s. Okay, so what's their conclusion? Price controls. Okay, let's take a look here. This is a nice historical catch-up. Okay. Not only was this was the great inflation here from the 70s. Okay, here we go. Can we whip inflation now? The 1980s episode suggests that the Fed has the tools to tame rising prices, even if recession is the cost. Ooh, of course, the Volcker cure might prove as useless as the next occurrence of inflation as the Phillips curve was against the last one. Oh, okay. So Phillips curve is the relationship between wages going up and inflation, and this sort of. Well, where do we want to go with this? Well, let's see here. Sorry, Phillips curve, unemployment and inflation relationship, same thing basically. But what I'm trying to understand if they actually have a conclusion here. I mean, I suppose their conclusion here perhaps is it's time to start worrying. Basically, they're saying the Federal Reserve could push us into this corner of we have to raise rates to tame inflation, but that could spawn a recession. And maybe that'll actually help solve the problem of inflation, or maybe it won't. They're kind of taking a very sort of bearish outlook here and amplifying it, suggesting that, hey, look, we could end up seeing the Federal Reserve's actions fail against controlling inflation. And if the Fed fails, then we could be in a recession and be failing on inflation. Not so good. That's not so good. So not very, very optimistic here. Who wrote this? Let's see here. This was, I don't know who this is, but I want to see who it is. Barron's. Kenneth Pringle. Let's see. Kenneth Pringle, financial journalist and heading up Barron's Centennial Project. Okay, so he works at Barron's. Financial journalist and historian. Yeah, he's a little bit of a bear there on inflation. All right, interesting. Fed minutes. This is what we're going to be paying attention to today. Fed minutes they come out 11 p.m. or 11 a.m. California time. So we already mentioned that earlier. But let's take a look at what Barron suggests we're going to be looking for in the minutes. Economists and investors don't expect the Fed to raise rates before the tapering is complete. That's true. Jerome Powell even said that as well. So that's pretty obvious. Perhaps more important than liftoff timing is the possibility of an earlier or more aggressive reduction in the Fed's balance sheet. So that's probably going to be one thing that we look for in the minutes is could the Fed just come out in January 25th and 6th and say, hey, just kidding about the whole taper thing. We're just going to stop buying bonds entirely. It's possible. They are still stimulating right now. Okay. Yeah, check back after 2 p.m. All right, well, that's not much. Inflation is moderating, data shows. Yeah, but again, this is back to the PMI read. Yeah, we already talked about that. Talked about jobs. Okay, let's jump on over. Oh, there we go. Okay, so we had a little bit of a recovery here in stock prices. Looks like the SPY is still mixed. So this was actually just SoFi right here that's recovering. Let's see if some of the others are recovering as well. Tesla actually going green today. My goodness. Oh, wow. Robinhood just plummeted just out of nowhere. Robinhood actually started the day off green and just fell 3%. Salesforce recovering a little bit. Roku recovering a bit. Enphase not recovering at all. Enphase going to the toilet. Lucid down about 3%. Shift Technology recovering a little bit. Nikola continuing its rally. Seems like it's any automaker except Tesla right now. Last couple days we saw Ford doing very well. Now we're seeing a movement here on Nikola. Alibaba up 4.2%. Look at that trend line. My goodness, that's a pretty nice recovery here. Warren Buffett and Charlie Munger apparently very bullish on Alibaba and a recovery here. There have been a lot of false starts, unfortunately, for Alibaba. We have been declining here since $319. Ugh. What was how low did we go during the pandemic? Look at this, folks. March of 2020, we went all the way down to almost $168 for Baba. $169 for Baba. And we are actually substantially below that right now, trading for $124. So yeah, I'll take a quick peek to see if there's any move in the back end here on Baba. Let's see here. Baba. Okay. Alibaba individual news. We have Chinese stocks extend rut in U.S. on 10-cent sale concerns. Well, that's bad news, not good news. Yeah, it seems like the only news is really the Charlie Munger doubling his stake in Alibaba news, but we already knew that yesterday. So interesting to see a 4% move on Alibaba today, though. We do get larger swings on the Chinese stocks. Beyond Meat, 4%. Upstart coming back, 3.6. Uber, 3. Lemonade actually green today, as it's up about 2.2%, sitting at just $39 right now. My goodness, look at this chart on Lemonade. $39 sitting in this channel right now. Oh wow, look at this channel, folks. This channel, I didn't even realize this, so I drew this channel because of price action that we've had here. But look at this. The channel was actually the support after the IPO. That's incredible. The same levels are at play right now. Specifically that 44, is that the 44 line, or where is this? Hold on. This is, where'd it go? Uh-oh. Did I screw it up? Uh-oh. I screwed it up. I think I accidentally moved it. Anyway, it was right around here. Dang it. I wanted to say it was at about 44. So I'm going to go ahead and pull it, draw it back to 44. I got to make sure, big tip, lock the lines so that way you don't accidentally move them. Let's say we were roughly 44. I'm going to leave it here. I'll lower its color just to remind me to double check it later, but I'm going to lock it now so I stop accidentally pulling these things around. All right. Tesla is up about 0.25%. Alibaba now 5%. Intel up 4%. Pinterest cheesecake 3.25%. Still continued pain on software. Software and technologies over here. Nice buying opportunity for some of these. Etsy, look at this. Etsy just broke. Oops. Go ahead. Etsy just broke $200. Yeah, Etsy sitting right now at 197. That is a substantial and a recent low here. Okay, let's go ahead and see how the indices are doing and bonds are performing. Because we've seen a lot of this sort of flight. Oh, yeah, look at that. Okay, all of the indices are now red. We were green on the Dow. That's gone red. We were pretty much flat on the S&P 500. It's now red. The NASDAQ was down about 1/3. It's now down 2/3. All right. Let's see if bond yields are moving. No, not really. Not really. 10-year sitting at 1.65. This is, to me, this is, yeah, and then stable on the 2. A lot of nervousness about what the Fed minutes are going to show. I personally don't really love the Fed minutes. The Fed minutes are really an opportunity for reiterating what the Federal Reserve has already told us. So, rarely does there come a lot of news from a beginning read. But, wow. All right. Bitcoin sitting at 46.2, slightly rotating down here. Looks like rotating down with the NASDAQ again. Did calculate that beta is getting substantially close to 1 between the NASDAQ and Bitcoin. And the sell-off on Salesforce continuing, now down 6.1%. Roku 4.5, recovering a tiny bit. Adobe recovering a tiny bit as well. Lucid down about 4. Enphase getting back to buying opportunity phases, $171. Trade Desk, another one, $83.49. Wow. Wow. Getting some sales here. How's Affirm doing? Affirm down about 1.28%. Looks like it's got a little bit of green momentum at its back. See if that continues. Somebody wants to know what I would prioritize buying if I had a large cash position. Well, I buy my favorites. That's what I would do, and that's what I've been doing. I sent some more alerts yesterday. Tempted to make some moves today, but we'll see. It's got to be right. You don't want to be impatient. Every time you make a decision to pull the trigger, so to speak, you really want to know what you're getting into. So that way you have conviction when you're in and hard times come up. There always can be hard times for stocks. Maybe this is just one of the beginnings of hard times for stocks. We'll see. EXPI is sitting at 31.20. Its floor is about $20. Now, we go back to some of these floor prices here. We continue to break these. Let me see if Lemonade is still under 40. Yep, Lemonade's green, but still under 40. SoFi is over 14. There we go. SoFi's moving again. Not much. I mean, it's a 0.93% move on the day, so not much. But let's go look in the back end to see what's going on with Beyond, because Beyond Meat's moving. I want to see here. Beyond. All right, let's see. Beyond Meat games after KFC confirms plant-based chicken. Wow. Beyond Meat soars after deal to launch plant-based chicken at KFC nationwide. Wait, that's actually quite interesting. Like, can I get plant-based fried chicken then? Now, and is that ironic? Like, if you're going to have plant-based food, is it ironic to fry it? I don't know. I don't think so. Sounds good. I'd be down to try that. It's very interesting. Yeah, that's a good point. How well did that work for Burger King, though? That's very true. Stocks moving a bit. Did Nancy Pelosi get an early look at the Fed minutes? Maybe. All right. So, yeah, yesterday was quite a painful open because things started out pretty decently. And then we had this drawdown. Right now, it looks like the things that are selling down are leveling out already. So seeing some resistance. Yeah, Alibaba hitting a lid about 4.8%. No substantial other movement that we can see. PayPal 1.59. Yeah, it's got a lot of work to do. Let's go to Tesla for a moment. Tesla 0.43%. Huh. Just such a mixed market. But it does look like there's some enthusiasm coming back to the market right now. The exception of for Lucid. Grab Holdings. These guys rotating down. Enphase looks like it's just now finding its bottom. Adobe's U-turned back. And so is Roku. Both of these now rotating back up. Marquetta still down. All right. Let's see what else we have. Let me look at... I didn't even share the screen there for a moment. My bad. Okay. That's all right. Maybe you're just listening. So let's see what other headlines. We have U.S. tech rut deepens as bond yields remain elevated. Well, what'd you think? They were just all of a sudden going to go down? Morgan Stanley and Wells Fargo say the great stock rotation has legs. This is a rotation away from growth and towards value. Wall Street pros are doubling down on a big stock call for 2022. The leadership of high growth tech darlings is no more Inflation-adjusted yields rise on the conviction that the Federal Reserve will tighten its policy. It's interesting. I've heard a lot about the Great Rotation today in my pre-market research, and a lot of folks think that's true, that it's time for big tech to take a back seat. Personally, I think that's creating some nice discount opportunities for me. If you're eating fast food, you aren't doing the planet any favor. No kidding. No one cares about plant-based food anymore. That's interesting. Okay. So what other news here? Quant strategy. No, that's not interesting. ZipRecruiter, $500 million bond sale. TD Bank to sell bonds. Okay. Yeah, nothing really particular out of the ordinary here. Let's go back to the tickers here. Okay. Understand price action a little bit more. SPY's almost fully recovered now. This is good. Let's go back. Hold on. I want to look at the indices now. Wait a minute. Are we? Look at that. What the heck? I mean, it is so flip-floppy. It's like the market's wearing flip-flops. All you hear is flicka, 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 flicka. And at the same time, it's just like, now it's here, now it's there, now it's here, now it's there. It's just no consistency at all. I mean, don't get me wrong. I'm not unhappy that things are going green again. But golly, make up your mind. And I think that's the problem, is the market can't make up their mind. I personally think, well, should have shorted Lucid again yesterday, but oh well. Really, when are those delivery numbers coming out, by the way? That'll be interesting. But I keep eyeballing Salesforce. I mean, honestly, some of these numbers are starting to get very interesting. Especially, I mean, if this pain keeps going on Salesforce, it's going to start getting quite juicy. Matterport, look at Matterport fall here. Really getting pained here after this whole metaverse hype. I mean, that turned into pure momentum over in this region here. But the fact that now we are falling to these new support levels here at about $18, about $17.50-ish, not so ideal. Could end up seeing Matterport draw down more, unfortunately. I still strongly believe in the company, so nothing's fundamentally changed for me. But it's the kind of volatility you're getting in the market right now. A firm at $83, just quite frankly seems like a bargain. Etsy under 200, now finally within my buy range again. Robinhood recovering after some bizarre cliff dive that it had there in the middle of the day. Alibaba not running as much as it was. Nikola is really one of the winners today here. News of that they're finally dropping their lawsuit and putting on their big boy pants and sucking it up and trying to put in a good, honest day of work. Yeah, Shift Technology down 4.2% now. Looks like still got a burning kind of activity here, specifically on Lucid. Now down 4.5%. Enphase sitting at 172, having a hard time moving back up. DocuSign 150 just stuck as well. All right, let's see what other info we got in the back here. Okay, we talked about bonds a lot, especially yesterday. Volkswagen and Toyota, we've already talked about this. Tech weighs on equities with chips in focus. Interesting. And somebody else is saying BTC is moving now. Let's quickly look at that. Fact check. Yes. Wow. Look at this, folks. Look at that. Out of nowhere, we are all of a sudden now heading towards our $46,800 resistance level See if we can get a breakout on this. Keep an eye on BTC there for a moment. All right. In the meantime, the biggest tech stocks are slipping in early trading, squeezed by the specter of higher rates. Chip makers are mixed as the industry faces particular scrutiny. Ooh. And then, of course, anything that's IPO'd or SPAC'd recently has definitely been getting hit. Ooh. Speculation could fade more even in tech space. The sell-off in mega growth stocks looks set to damp investor speculation fervor even within the tech space. Look at, oh, that is interesting. What is the Renaissance IPO ETF? That's interesting. But take a look at, I'm going to pull up a chart here. Look at this particular chart. This chart here shows the S&P 500 as the white line. Profitless technology companies, expensive software, and IPOs, folks, all straight down. Look at that. Profitless technology, IPOs, and expensive software. And if you're all three of these together, like lemonade, you're just getting destroyed. So here's your trilogy of pain. That's what I'm going to call it. The trilogy of pain. No profit, software, or recently IPO'd. Ouch. That's what's happening now. Now, this sort of divergence from the S&P 500 could always potentially end up leading to outsized gains in the future if you did a lot of your buying now. So yeah, this is something to keep an eye on. That is, that pain could substantially continue for the time being. I personally maintain that these are buying opportunities, but they don't have to be, especially if you do not maintain conviction in the stocks that you are buying. Tesla rallying all of a sudden, up about 1.6%. Airbnb sitting on 173, up 1.6%. Bitcoin jumping above that resistance line, 46.8. See if it can maintain that. That'll be a nice little test there. Some of the pain is subsiding. Not a huge subsiding, but some of the pain's going away. Not as painful anymore for Roku and Adobe, for example, but still just as painful for some others. Looking at the upside here again, Nikola, MP Material, again a move on MP Material here, now at $52 on MP Materials. Pinterest up too. Okay, folks. Well, very interesting. We'll keep an eye on the market. Thank you so much for watching. Check out the programs linked down below on building your wealth. Get yourself life insurance within 5 minutes by going to mentkevin.com/life, especially if you're stressed out in the market. And the fact that you're in a pandemic, get yourself some life insurance in as little as 5 minutes. Use that link down below, folks. We'll see you in the next one. Thanks again.